Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 27th COT report of 2013, and as usual we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got rough rice on top with a 40% change in commercials positions, an even larger 53% change in large speculators positions. You can see the changes over here being much larger than average. On rough rice, on this 1 year chart, you can see that we can find large changes in the past. And of course, we can analyze them and see how prices reacted to it. Well, here we had a bearish signal just before this decline started. And then again, we have a bullish signal right over here before this rally, and another one over here. So you can see these large changes affect prices in rough rice. So we may easily expect a similar price reaction maybe the next week and upcoming few weeks. Let's have a look at the 5-year chart just for a second and see how extreme this market is. We had this extreme for quite some time now. Actually, the fact that commercials were net long was suggesting we will see a bullish move, and of course since then you can see prices are steadily going higher and higher. We would get a really nice bearish signal if commercials could go below 7,000 or 8,000 contracts net short. So you can see we're quite far from those levels right now, so the bullish mood is still present in this market. Moving on to cocoa oil, we have a 23% change in commercials positions over there, roughly the same change size in large speculators. Changes are much larger than average, but nothing too unusual. Let's have a look at the 5-year chart and see how extreme this market is. Here we go. You can see that basically we're not at an extreme level. We may talk about a relative extreme. We had a pretty large extreme a few weeks ago, a few reports ago. This was a bearish extreme. You can see it coincided with this relative top over here in prices, and now we're moving away from these levels. A beautiful bullish signal would occur if we reach roughly 20,000 contracts net long levels in case of commercial. We're a bit far from those levels. Of course, this relative extreme may push prices higher. You can see that the previous one was over here. Basically, small speculators were at net zero level where we are right now. So this may actually happen again. Moving on to the dollar index, where we had a 21% change in commercials positions and roughly the same change size in large speculators positions. All this happening after a really large rally and then huge price declines in the last couple of days. Moving on, let's have a look at the 5-year chart and see how extreme this market is. We were talking about a large extreme a few weeks ago. Actually, this was a bearish extreme. The fact that commercials were at such levels, of course large speculators also, and small speculators being so optimistic about the market, actually determined that this will be a top, and since then prices declined for a few days, basically a few weeks maybe, and now we're over a bit of a rally, so we may see prices declining again. We can't really talk about a huge extreme right now. It may be that the large changes will affect prices in the dollar index. Let's have a look at large speculator COT Extreme. Here we go. Crude oil on top. We have an all-time COT Extreme in crude oil. This case in large speculators. Let's open the chart. Here we go. You can see prices are actually in a rally mode right now. And opening a 5-year chart, we're going to see the extreme. Here you go. Basically, the fact that the large speculators are above 300,000 contracts net long levels is a huge extreme in this market. This is actually a bearish extreme, and if you look at the chart right over here, I'm going to show you a few moments in the past when we had such large extremes in this market, and they always happen just before a top occurred and prices declined. So of course, big question, will we see that happening again? Well, of course the chances are that this tendency may continue. Moving on to gold, we have a 439 report extreme in large speculators, 601 report extreme in commercials. We've talked about gold last week. There was, of course, this extreme was still present last week, and it's still present right now. You can see prices have started to go a bit higher right now, and it may be that prices are going to start reacting to this huge extreme that we can see in this market. Just going to open, let's say, a 15-year chart, and you're going to see how huge this extreme really is. The fact that commercials and large speculators are so close to the zero line didn't happen for quite some time. The extreme is huge in this market. And then our last market, the Kansas City wheat, we have a 437 report extreme in large speculators over there. And of course, roughly the same extreme in commercials. And we're going to open the 5-year chart just to see this extreme on a wider perspective. Here you go. And then, as I've showed you basically last week, we talked about Kansas City wheat last week. Whenever we were at such levels, they always coincided with a bottom in prices. So we may easily expect this to happen again. And I think if you took the opportunity last week, you may already be in a profit right now if you look at this chart. Okay, that's all for this week. If you would like to have a look at other COT charts, you can do so at our COT charts page. Or if you'd like to have a more in-depth and detailed analysis, then check out our COT analysis page, where you can add other really useful functions to our table, look at new COT report types, data types, and all sorts of really useful functions. So I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.